guys? I got three stocks that are high risk, high reward that everyone should be considering in their portfolio. So let's hop right into it. All right. So the first name on my list is Rubrik. Essentially, the company provides data security and backup software that, protects and restores critical business information. Its platform takes these snapshots every so often of data so that an organization can recover quickly from a cyber attack or a power outage. Think of it as a safety net, or honestly, even better, a checkpoint save file in a video game. You know, the rubric is essentially restoring you from the last snapshot and getting you back up and running quick. So, like I said in the beginning, it's a high risk, high reward stock. And the risk comes from right here, right? The income statement is all red, blood everywhere. You like to see the top line growth, right? They've gotten from 387 million to just a clip over 1 billion in the LTM here in 5 years. Great revenue growth. But they're still very much scaling and not profitable yet, which is why this is a risky investment. But if you take a look at just some key performance indicators here, they've been able to grow exorbitantly. Customers with over $100,000 or more. If you take a look in that first graph, in 2019 they only had 23 customers with over 100 grand more in one client. You look at 2023, they were at 1,200. Fast forward now to the second quarter of 2026, and that number has doubled. I mean, they are flying. They're starting to catch big clients, and big clients are starting to stay with them. And then if you take a look to the Sank graph here, the rapid subscription annual recurring revenue growth at scale. I mean, look at it, 35% year over year growth in ARR. That's revenue that's not going anywhere. It's continuous revenue. And I mean, they've been growing that consistently since Q1 2023. I mean, beautiful execution. So it's interesting because if you take a look at all of the SaaS companies and plot them here with the x-axis showing the next 12 months revenue growth and the y-axis showing the next 12 months revenue multiple, you can start to see some patterns here, right? What do you see all the way in the top right? Palantir, because they are growing the fastest, but they also command the highest multiple. So in this graph, you want to be all the way in the bottom right. And who do we see all the way at the bottom of the right? If you're below that line, the R2 correlation line, like that's even better. And you want to be as far to the right as possible. And who do we see down there? Rubrik, right there. It is the second fastest growing company, but the multiple they command is below 10 times. I mean, it's among all SaaS companies, and I know tech gets priced expensive for the growth numbers they're putting up. This company is cheap, cheap, cheap. Marky likes. And I like to buy stocks that have insider ownership, right? If you read a lot of valuation books, forget who it was who came up with the three-pronged stool with one part being valuation, one part being management, and one part being insider ownership. And it's just interesting to see, right? Because a lot of the times they have skin in the game, right? So if they want their stocks to be worth more money, they need to start performing and executing. So when you look at the insider ownership here as of Q2 2025, right there's different classes of shares, right? Class A and Class B. And I would like to see more insiders in the Class A, as there's only 3.7%, but the Class B, you can see it's comprised of 81% insiders. So there are definitely insiders, people who work at the company who are believing in it and have money, skin in the game here, which is what you want to see. And just a thought here, Rubrik is very similar to Zscaler. And when Zscaler hit 1 billion in revenue, and I think it was 2022, yes, you can see that, and they had some very similar margins to Rubrik. and they started trading at 33 times revenue. You could see that in 2022 EV to revenue. Now it only trades at about 14 times, and Rubrik now only trades at about 10 times. So, I mean, I think there's definitely some movement upward based off of how, Zscaler performed in the past that we can expect to see in Rubrik. All right, the next stock on my list is SERV, ticker SERV. And SERV Robotics sells a last mile delivery service via a robot. I'm sure you've seen the videos going around of it's like a little cooler with four wheels and just drives right down on the sidewalk at like 2 miles per hour and DoorDash you your food essentially. It basically, the robot is a sidewalk robot that goes to a restaurant. A restaurant employee puts the food in the robot's container, and the robot travels on the sidewalk to deliver the food to the address. The service is provided on Uber Eats, and Uber still does hold a minority stake here in Serve Robotics because, Serve Robotics kind of started off as a spin off from Uber. It was originally a Postmates project, and then as Uber came to acquire it, and stuck with them. And the motivation behind these robots comes from the data that more than 50% of these deliveries made are within 2.5 miles from the restaurant. It's like interesting, right? Like they had a slide in their investor presentation, and there was a burrito in a car, and it was, why do we need a 2,000-pound car to deliver a 20-ounce burrito? Pretty good analogy. But these robots are really useful for food delivery companies, as it should really, really help them cut down costs on deliveries, drivers, gas, all of that. And Serve has a really strong history of growth. They're now in 3,600 plus restaurants. They're up 40% quarter over quarter in deliveries. They have a 99, almost 100% reliability score. They've done over 100,000 deliveries since 2022, and they have 1,000 plus robots on the streets now, and they're projecting 2,000 by the end of this year. It's pretty interesting when you think of it because, like we saw on the last slide, it was like 50 some percent of deliveries from restaurants are within 2.5 miles of the house, right? So, I mean, these autonomous vehicles and drones really seems like it wouldn't be a use case for it. And then on top of it, even more so, if you were going to use drones or autonomous vehicles, there's a lot of regulations and a lot of safety risks surrounding them, right? Like drones, you got to get cleared for the airspace. AV, there's going to be more regulations, like this little autonomous robot serve. It might bump into somebody here, but an autonomous vehicle could run over and kill somebody. So I just think it's interesting to keep in mind here that, is it the most impressive autonomous robot? No, but is it the most practical and safe and quickest to deploy? Yes. And here's why the stock is so risky. Taking a look at their income statement, they just generated $2 million in the LTM, and they're just burning money here, right? There's losses straight through. As soon as you get to cost of goods sold, they're not even covering the cost of their robot. So very much a very risky play here, but high risk, high reward. All right, next up, and the final name on my list here is Zeta. And Zeta basically offers an AI marketing platform that uses data to predict consumers' intent and help businesses manage the customer relationship and preferences better. So, why is this stock undervalued? Well, at the end of November 2024, Culper Research released a short report alleging that Zeta's use of consent farming being, a major red flag here. They claim Zeta obtained misleading customer data and used that to bolster data collection and double dip on revenues. And Culper's claiming over 50% of the EBITDA is attributable to this practice. The stock immediately plunged 37% on the release of the report, and it's declined ever since, falling from its high of $38. And management's response was that they vehemently denied Culper's report. They state that the revenues from the alleged consent farming sites account for less than 3% of total revenue. And Deloitte, who's their auditor, issued, an unqualified opinion finding no evidence of, accounting trickery. Insiders like the CEO and CFO and several directors purchased shares totaling $3 million. The board almost immediately issued a $100 buyback. And if you take a look here at their valuation metrics, you could see they're trading at a cheap discount to their historicals, right? Their price to earnings, they're trading at almost 50 times, 26 times, 21 times, 25 times, and now back to 21 times. If you take a look at the next 12 months levered free cash flow yield, it's trading at its highest point in 5 years. So it looks like a very interesting time to buy if you believe management about this, consent farming here. And the company continues to improve its fundamentals. I understand, and why I showed you right that it's risky and started off with saying that is because the company, their profit isn't exactly what you'd like to see. But what is important to me is that it's very strongly trending in the right direction here. If you take a look at the operating profit here, they just crossed profitable here from, the chart goes December 2022 to September of 2025, and they just basically broke even in September of 2025. And if you take a look at their operating margin, I mean, they've brought it from minus 260% to break even now. And you know what's coming next? Profitability. Thought these two slides from the investor presentation were really cool and put into perspective, that Zeta is trading at such a steep discount, but has, very much so improving fundamentals and their guidance. But take a look at this to really put into perspective. Among all of the publicly traded tech companies, only 22 of them have grown or expected to grow at 20% year over year over the next 5 years. And among all of the same public tech companies, only 8 have also expanded or are expected to expand free cash flow margins every year over the same time period. I mean, that is so impressive that Zeta does that. I mean, what a small group of names you can say are doing at that, especially trading at a valuation that is, crest like this. I mean, it's a great time to get in. All right, that's all I had for you guys. Those are the three names I'm eyeing up. They are more risky here. A lot of them aren't even profitable. So, always do your own research and check before you buy it. But these are definitely some high risk, high reward names here. Hope you guys got something out of it, and I'll see you next time. It is the